Welcome to Before the Bell, your home for actionable pre-market content. Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Friday, March 11th, 6:50 a.m. as I'm starting the video. And as always, run your video player at 1.5x. Just coming out of a news cycle here about 10-15 minutes ago. Positive comments from Vladimir Putin on progress on peace talks. I don't have all the details, but the bottom line is it has jumped futures. Equities are up about 1.4 to 1.7%. So we're going to have to see today if those comments stick or they end up fading it. Maybe good opportunities there either way, either higher or lower for active traders. Interestingly, oil did not move, up 2%. Bitcoin's flat. Gold has taken a hit on that headline, down about 1%. Copper is flat. The only thing on the macro front today is Michigan consumer sentiment. So let's dive right in, even though obviously the charts and any comments that I have for them are going to be, I don't want to say null and void. The levels are still valid, but as we've seen, headlines come and go. You have a gap up and then a gap down. So what I'm going to try to do as I go through the charts is give you levels that if we jump above and hold, it would be near-term bullish for the market. So let's take a look. Let's start it with the VIX. VIX is set to open right around 29, and that would be, we've got this support level here. We closed near the lows yesterday. We closed at 30.23. So now we're down at 29, maybe 28, high 28s. So what you can do on your dashboard this morning is, keep your VIX front and center, that you can keep an eye on it. And so now this little zone between 29 and 30 should be resistance. I mean, if it's a good headline and everything sticks, you shouldn't see VIX rise throughout the day. You should see it fall. So that will be a really good tell for you to see what's going on. And if you see a green on the board for your indexes, SPY, QQQ, IWM, if you see that green, but then you see VIX rising, a green VIX along with green market conditions, that's a yellow flag. That would be an indication that more hedging or more outright puts are being bought, elevating the VIX. So watch that today. And if you see a green VIX and a green and green board, green across the board, be cautionary on that. So that's the VIX. I wanted to spend a little bit of time here before we get into the indexes to take a quick look at bonds. I've got these charts on the blog site this morning if you want to take a closer look. Here's TLT, the 20-year bond weekly that goes back into 2017. And you can see we're down here getting into a critical spot. There's a zone of support between about 131 and 134, where you can see there was a fair bit of traffic. Notice below 130 though that you move into a big void on the charts. So I'm sure the TLT is front running the fact that Jerome Powell next week will start the rate hiking cycle, and of course when rates go up, TLT goes down. But I wanted to point out this critical level here. And if you wanted to, even if you're not a big bond trader, if you set an alarm down here at 1:30 and that thing goes off, you may want to become a bond trader, because there's not a lot of support down here. You got a little bit here at 124, but after that, you're coming down to 117 and a half. I mean, that won't be in a straight line, but when you lose this 130, 131 area, there's not a lot below, and that would be a great risk reward trade on TLT. Moving on to the HYG, this is your high yield corporate bond ETF, and I've got a note here that when HYG is rising, it's a good proxy for risk appetite. These are your lowest tier companies, your triple C's and your B minus type bond ratings, not the best companies in the whole wide world as far as corporate balance sheets. So when people are buying those bonds, what they're saying is they have risk appetite because they think the chances of defaults on those lower tier companies is low. And what I've done here is highlight the places back in time where HYG gave you a heads up, hey, there's a problem. They often say the bond traders are the smartest guys in the room. I don't know about that, but they do have a way of sniffing out what's going on. Back here in April of 2015, HYG started to lose the thread. And then in August of 2015, China did a devaluation on the yuan, and everything kind of fell apart. If you were trading back then, you know what I'm talking about. Then the market bottomed in early 2016. HYG put in a V bottom, and then it was off to the races. The next time we saw a big wobble was in Q4 of 2018. That's when Jay Powell said, we're on autopilot. And then, all the bond market just completely locked up. And you saw this big, it doesn't look like a lot here, but it made a sharp move down. And that was in conjunction with, a 20% drop in SPY in a matter of 3 months. And then in January of 2019, that was the Powell pivot when he said, I made a mistake. Now we're going the other way. And then you get the big V recovery. And then that brought us into early 2020, where you'd have to go down to a daily chart to see exactly when HYG started falling apart. But this was the COVID rug pull. And then the sharp V recovery, because the Fed was stepping in, buying all this stuff, and then it popped right back up. But now you see at the start of 2022, HYG is again moving to the downside. And I wanted to point out that this 82 level looks to be really, really important on the chart. You've got a large, you can see this value area here that starts at 82 and goes up towards 86, 87. And then you can see below that, there's a big void in the charts. And so now price is moving below that level with not a lot of support down below. You could see a fast move down to 79 or the next large volume over price bar at 78. So I would definitely keep an eye on HYG. Here is LQD. These are the investment grade corporate bonds, the highest tier of credit quality that is out there. And this is not a good look. And remember, QE is over as of, like 2 days ago. So after COVID, you had the Fed step in and start buying all these corporates. I mean, buying Apple and, buying everything under the sun, and stabilize that market. But now they're gone, and you don't have that invisible hand under the market, and you can see what's going on. And I mean, that's a sharp move, going from 134 to 120. What is that saying about the confidence of bond investors? And it's starting to get that COVID waterfall look. So set yourself some alarms. I mean, just on a measured move basis, you've got a range here between 134 and 128, or excuse me, 126. So that's an $8 range. An $8 measured move from, let's just call it 126, gets you down to 118. And if you were to lose 116, 115, I mean, there's nobody home below that. And that would really flag a problem in the market. And so even if you're not a bond trader, please keep an eye on this, because they have a way of knowing before everybody else realizes it that there's a problem. And one of the reasons that you would be selling an investment grade bond is if you thought there were going to be bond quality downgrades. So if you have an A-rated bond or a double A-rated bond, and Moody's comes out and says, you know what, you're losing your investment grade rating, these investment grade holders have to sell because of their mandate to only hold investment grade bonds. So if you lose that top tier credit quality rating, then they got to sell the bond no matter what. So keep an eye on this stuff. I think it's really, really important and something we haven't talked about in a while. Okay, moving on to SPY Daily. I just took a quick look at futures trading around 432, and that is right here at this big volume over price bar here with a gap above. So, and with the 200 EMA at 436. So the gap up would bring us right to this big resistance line. And if there was a place that they were going to fade it, it would be right here, or potentially a run up to fill this gap, back touch the 200, and then roll over. So watch the 200, watch this 432 and a half this morning, see how it handles this gap and the 200, and then see how it goes. A very bullish development, of course, would be to close above the 200 EMA. This is all fine-tuning those levels. You can see here a move up to 432.50. You've got the gap here, and then you've got the top of this old trading range at about 437. So the 200 EMA is going to be coming in right here around 436. So that would be a huge level to jump over here this morning. And here it is on the 30-minute chart. Just a little magnifying glass on the same levels. Qs, I got trading about 337 the last time I looked. You've got a big line of resistance around 341, and then here about 347.50. We still have the bearish stack on all the EMAs, but you got to respect a breakout if you get it and it holds. So I think your first line is right here around 341, where this prior low was. That'll be a resistance point, and then an upside objective would be 347.50. Notice that you've got the declining 20 that coincides with this 341 level. If there was going to be a fade, I think it would probably be right here at the 20. And let's see. Yeah, 341.50 is where the 20 is at. 2 hour just gives you resolution. You can see right here you've got this trading range here, and then you've got large volume over price bars. So it'll remain to be seen. You know, can they pop this and keep it going, or do they run into trouble right around this 341, 342 area? And also, I would say, if you were trapped in some longs that you really didn't want and you still had, and you get this nice pop, that you get a sense that, hey, you know what, they're fading this, that would be a chance for you to get out at higher prices. I mean, that's going to be, you know, game time on the sideline decision making. But, you know, if you got somehow trapped in a move and you get this relief rally that you get a sense is going to be faded, then you can get out at higher prices. On the other hand, if you see price break out, then you can regard that as a, you know, as a save, as, you know, a chance to hang in there and see how far the rally could go. Because, I mean, it's all headline driven, right? You get a positive headline over the weekend that builds on the Putin headline, you're going to be a gap up on Monday. If, you know, over the weekend comes out that it was just a head fake and there's really no progress, it's ripe for a gap down on Sunday night. So really dicey situation. And while we're on the topic, remember, heading into the weekend from 2 to 4 in the afternoon is where you're going to get a good read on risk sentiment on who wants to hold and hold over the weekend. And that'll be a good tell, because if people get a pop that they want to sell into the weekend, you'll see that on an afternoon fade because they don't want to hold over the weekend. So be on your toes for something like that. Here's the detail on the 30-minute chart. You can see that big trading range comes in with the large volume over price bars right in that 341 area. You can see it right here. IWM, I have trading at 203, which is right here on this line. Still, bearish stack on everything, but 203 was a level that we had pre-marked on the chart. You can see rejection here, 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 here. So that's a pretty good line. If it were to get above, then you've got the 50, and then you've got big downtrend resistance at 206. I'm not going to spend a lot of time here, just all the micro details on this, on the 2-hour chart. You can see where the 50 EMA comes in. It's right down here at 205. So a lot of work to do on IWM if it's going to power out. 30-minute chart, you got the detail, you got some overhead gaps, stuff like that. If you're new to the channel, thank you so much for spending some time with me this morning. I work hard to give the team actionable levels and good commentary on the markets so they can fine-tune their thoughts for the day and get ready to execute around the levels. If you spend some time with me, you should get a lot of confidence in my ability to point out those objective trading levels, and that will free up your bandwidth to focus on execution, and that's where you're going to make your money. If that appeals to you, please hit the subscribe button and the alarm bell. Jump over in the show notes, find the link to drop in your email. That way you'll get all my content morning, noon, or night. Market commentary, trade ideas, observations. You won't have to hunt for them on social media, and you'll also get an invite to our trading room. So it'd be great to have you, and certainly pass the link along to anybody in your trading circle that may benefit from the work. Quickly going through FATMAAN, I'm sure we're going to see some gap ups on this move, but I'll show you the levels. Facebook, big downtrend on the 60-minute chart. The daily chart is very bearish after the big gap down. You've got a trend line here, comes in, let's just call it at 200. You get a break and hold above the trend line. You could run up to 204 and then potentially 208. And of course, then you'd have a big gap below that you can mark for trading down the road. Amazon is up in the pre-market. I show it trading at about, excuse me, this is Apple. I'm sorry, it's trading right around 161. So right in this area, not a big jump, but I mean a couple bucks. We came down yesterday, filled that lower gap, found the prior low, and then bounced, and leaving this big gap above. That was textbook trading yesterday. Once you got that gap entry here at, right below 160, you got the gap fill, and then finding support right at the prior low. So that was right by the book yesterday if you were trading that. So now we'll get a gap up this morning. So you'll have a gap below and a gap above. If things stay bullish, I wouldn't be surprised if price went back up to tag this 163, and that's going to be your real tell right there. Why do I say that? Well, one, you'd have the gap filled, so technical check mark off the board, rejection, 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 support, 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 support. So that 163 is a big, big line for Apple. And if it can break above and then take out this downtrend line, you might have something going to the upside. But I would be watching that 163 very carefully for a fade into the weekend if people get skittish. Tesla came down. This trend line here off of this low, catching this low and catching the low of yesterday is a new trend line that I just dropped in. You can see that Tesla is coiling for something that may prove to be quite significant. You see the coil here, 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 here. You can see the triangle narrowing. That's building energy. So even if you're not an active intraday trader on Tesla, I think you should be aware because it's setting up for potentially what could be a really, really nice swing trade. Because what I expect to happen is, it's running out of room. There's going to be a breakout or a breakdown, and that's going to have quite a bit of energy behind it after all this consolidation. So that's going to be a trade where if you're looking for, a nice swing opportunity, I would be watching for a breakout either above or below this triangle. And I did make an adjustment. The 200 EMA has dropped down to 258. That's going to be an important level on the chart. As long as it stays below, your default is lower. If it breaks above, then you can take a long with a lot more confidence. So as this thing narrows, and if you were to get a breakout to the upside that takes out 858 and 860, that's going to be a green light for a long. And then you can put a really tight stop right at the 200 and just stay long again against it if we get a topside breakout. Microsoft, I think the level to watch here this morning is 290. That's a level that has come up again and again and again. Why? Reject, 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 support. Big line on the chart. If it can break out of 290 this morning, I would take it long for as long as you can with a good chance for a run to 294. If you get a pop up to 290 and you see that lot of trouble there and you get a sense that there's a fade, you can get short against 290 with a stop just above. And if there's a big fade in the afternoon, then you have a nice trade on your hands. But I think 290 is the spot. I don't think you're going to be able to, if you're not already in. I mean, if you got long yesterday and you're still long, then you're going to get a nice pop this morning. And I would be watching that 290 like a hawk. Speaking of yesterday, nice technical action again. We had the gap down, and look, we had a perfect back touch of the top of the gap, and that's something that we talk about all the time. First touch of a gap usually holds. It's the second time that you really got to worry or be on your toes for a gap fill. And so if you navigated that in real time yesterday, that was good trading. So Amazon, trading right now in the pre-market at 29.90. So, I mean, right at this 3,000 area, just above the downtrend as I've got it drawn. You can use that downtrend as a, as a go, no-go line. Remember that you will have a gap below. Not going to be a big gap, but I mean, let's see. Closed last night at 29.36. So if it's at 29.90, you got about $55 to, $55 gap. And, it is Friday. It's Lotto Friday. So if that's your thing and you sense a fade, you might get a $50 gap backfill if they, fade the news into the weekend. So that might be a profitable trade. And remember, though, that they call them lottery tickets for a reason. Most of them end up on the ground, worthless. It's only bet with what you're happy to lose. Google, I don't have that pre-market, but you can see here, right at the bottom of this trading range, any kind of break above would target 27.10. You might have some sticking points here at 26.85, but then a break back into an old trading range targets the top of the box, which takes you to 27.10. Netflix, downtrend line, bearish chart, but any kind of pop above, let's see, you got a downtrend line here about 367.50, right in that range is where it's going to come in, maybe 370. But you've got a big line here at 372. If you got something above that and it looks like there's a lot of buyers, you can be long against 372 and then be shooting for 387.50 if things get all bullish. Semiconductors, again, nice technical trading. Gap down, essentially filled the gap. You had 4 hours where the bears could not break it, and then you got the run up in the afternoon. So that was nice technical trading, coming down to fill this lower gap. Now we've still got a gap above and a big downtrend line. I'd say above 257, you'd have some running room. You got a gap here. Who knows where it might open. Just keep in mind you've got a downtrend line. You've got some significant resistance there at 257. If it opens in no man's land, I'd just probably let it be and see if you can get an objective entry right around 257. If it breaks above, you can take it long. If it looks like a stall and a fade, you can get short against 257 and see if you get a move back to last night's open or last night's close at 251.50. So that would be a nice trade. On the blog side, I have these charts. Two big after hours movers last night. One was DocuSign, down about $20. One of those COVID lockdown darlings, I don't know what it was at, 380 or something like that. Now it's down to 90. Still with a negative PE, money losing company. It's going to open down here at around 70. Perfect setup for a bracket trade on Monday. Let it settle out, put your bracket around it, and then you can follow price higher or lower out of the bracket. If you're an active trader today, you can, play that gap, see if it's a gap and go to the downside. But there'll be a big gap above as well that over time, if the market gets real bullish, you may see a kickback rally just to close the gap and then fail. I think all these companies, this is not the environment for these companies. I mean, we've been beating it to death over the last few months. The ARC complex, all those money-losing companies, still, they've been cut by 50% and still have PEs that are either negative or literally in the thousands. I don't think those stocks are going to work. On the other end of the spectrum is LEU, this Centrus Energy in the lithium space, is set to gap up $10 on earnings. Number one, it'll set up again as a nice bracket trade for Monday if you want to do it that way, or today on a potential gap and go. I've got a level here at 53 that if it can get above the volume over price resistance really falls away, and this thing can really move when it wants to move. So the lithium space is perking up. The other day I pointed out ticker P as in Paul, LL, PLL, had a alarm on that. That has triggered and moved to the upside. So also in the lithium space. So check out PLL if you didn't catch it the other day. But that has been a nice move and threatening to break out to the upside. So watch LEU this morning and definitely set up a bracket for Monday for DocuSign and LEU. So let's wrap it up there. Let's do a quick little recap. Positive Putin comments. We'll see if they build on that gap up this morning or if they fade it into the weekend. Lottery Friday. Only play with money that you're happy to lose. Also, take a look at your weekend exposure. I mean, literally, anything can happen over the weekend. You get a good headline, you could gap up 3%. You get a bad headline, you're going to be biting your fingernails all night, Sunday night, looking at those futures down 3%. So take a look at your exposure. Figure on, if you pencil in a $3 gap up or a $3 gap down and you're fine with that, then you're fine. If you're looking at what you got out there on your positions and you say, oh my God, a $3 gap down, what's that going to do to me? Then you can either put on some protection for next week or reduce your exposure for over the weekend. Don't forget, next week is March option expiration, and we got Jay Powell smack dab in the middle of the week, 2 p.m. on Wednesday. So it could be, given the headlines, given Jay Powell, given OPEX, it could be a wild week. So hope you have a good day of trading, and I hope you have a good weekend. This has been Chris Buss with Traders Profit Compass. Talk to you next time.